Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and trading view with over 190k reputation points. In this video, I will be taking a pair, breaking it down from a technical and order flow perspective. And in doing so, I will provide as much free education as possible. So I really suggest that you stick to the video till the end, and I will see you on the charts. In today's video, I want to speak about EURCAD because at the moment we do have quite interesting price action and structure. Now, starting here from the monthly, what we can see is that at the moment the market is testing a very strong level of monthly demand and support. In fact, from here, all this move to the upside was created. The market once again here is testing this area from which we could expect a potential rejection to the upside. So here on the monthly, everything seems pretty bullish, dropping down the weekly. From a weekly perspective, we can see how the market at the moment just created this impulse to the downside and is currently creating this deceleration. Now, in creating this deceleration, last week the market also created this candle here. Now, as I said many times, when you see a candle like this with a very long wick and a green body, usually the next candle is supposed to fill in this wick. So there is definitely a possibility for some short-term bullish price action here, rejecting the monthly support that we have previously identified and filling in this wick on the weekly. Going down on the daily time frame, what do we see? From a daily perspective, we can notice how the market has now broken above this area, which was previous daily support here, again here, again here, and again here, and again here, which now that the market is about to approach it once again from above, definitely has the possibility to act once again as support and create a rejection to the upside away from it. We can also notice how we have an impulse and correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And we can see how this area is actually in between the 50% and 0.618 golden ratio of the Fibonacci's taken on this daily impulse, which are a very strong area of support and demand, which we do expect the market to test and then potentially to reject to the upside. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the euro, we can see how with the last reports, net positions have actually been decreasing. However, we do not see any shorts added with the last report. Actually, we're starting to see shorts getting closed. What this indicates is that if the market will reach this area, there is definitely a possibility for some longs to get added, since we have already seen that there is no interest in adding more shorts because clearly they're getting closed. So here there is the possibility for an accumulation and then a rejection to the upside. And if we go and see what we have when it comes to the CAD, is overall on the CAD, we're seeing net positions getting brought from 26k to 24k. Now, if we go from 26 to 24, this means that we're getting a decrease in the net positioning, which overall is supposed to make the CAD weaker. And a weak CAD is exactly what we need if EURCAD is to create a rejection to the upside. So instead of this area, how we could be approaching this potential rejection to the upside? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we have right now to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used precisely in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll down past the testimonials, you will see that at the moment I'm running a special promotion in which you have the possibility to gain access for 97 €97 for lifetime access. And if you open an account with the Forex broker Blueberry Markets using the link on your student dashboard, since I have partnered with them, you have the possibility to get a full refund credited back in your trading account. And if you scroll lower, you will see that here you have the possibility to join and gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. And I'll see you in my next video.